program that you got said that I'm supposed to talk about the role of the speculator. Who is he? What is he? What does he do? Why does he do what he does? And the first thing I think we have to do that is let's address ourselves, what is speculation? What is it that this guy, the speculator, is attempting to do? What's the definition of speculation? Webster would have us believe that speculation is the knowing assumption of a pre-existing risk. You can walk around Vegas, folks, for hours and hours and hours, and until you take a chip out of your pocket and put it on a table, you are not at risk. There's gambling going on all around you, but you do not have a penny of risk until you put a chip on a table. But if you're in the agricultural business or the banking business or any business you can think of, there's an inherent risk. What is the only thing that the people in this room could agree to as to the price of cattle? They're going to change. Some of the people think they're going to go up, some of the people think they're going to go down, and I think they're right. See, that's a joke. That means you can... Okay. What's the only thing we can agree to about interest rates? They're going to change. Most of you may think right now they're going to go down. There may be a few of you think they're going to go up. We know they're going to change. If you are in the money business, is there an inherent risk? Does it exist? If you're in a cattle business, is there a risk? The answer has to be yes. If you own cattle and prices go down, you lose money. You own cattle and prices go up, you make money. The risk is there whether you're willing to accept it or admit it or do anything about it. The risk is built into the deal. The speculator, on the other hand, is someone who knowingly assumes a pre-existing risk that wasn't his to start with. Now, why would anybody knowingly assume a risk that's not built into what it is that he's doing? Why would I make a conscious decision to assume a risk that's already there? This is going to be a real shock. It's with the preordained malice of forethought purpose of trying to make a profit. That's the only reason I do it. It doesn't mean I'm going to make a profit, but that's why I do it. I do it to attempt to make a profit. Now, a lot of people might have us believe that that makes me, due to the fact that I am a speculator and due to the fact that I'll stand here in front of God and everybody and actually be proud of the fact that I'm doing what I'm doing for the purpose of making money. Some people have us believe that that's bad. That trying to make money out of things is not a real good deal. I happen to believe, folks, that there's not one person in this room in the agriculture industry that raises cattle because he feels it's his duty to help feed the teeming masses of China. I don't think that's why you do it. I think you do it to try to make money. I think that's the only reason you do it. It's the same reason I do what I do. I do it to try to make money. The problem is that if a market goes the wrong way, you buy cattle, and they immediately go down, and it can be cash cattle, it can be tiddlywinks, it can be futures, it can be stocks, it can be anything. You buy cattle and they go down. You are immediately faced with two choices. Number one, you're stupid. You've made a bad trade. Number two, there's something wrong with the market. Which one do you think you all pick? Everybody picks number two. Nobody likes to wake up in the morning the day after you put a trade on, look in the mirror and say, "Good morning, dummy." That's no fun. So what do we all immediately do? The market's wrong. And how do we express that? I bought it, the market's down. We hear a guy say, "They're taking the market down." Oh, those people are crazy. They're taking this stuff too low. It should be higher. Da-da-da-da-da-da. You know who they really are? And they're always the same. They will always be the unknown person on the other side of your losing trades. If you buy something and it goes up, do you use the word "they're taking the market up"? No. You don't hear that when a fellow's making money in his position. Why not? Because if you have a profit, you do not need a psychological partner. You're emotionally very sound. God is in his heaven, apple pie's on the shelf, mom's lovely, and the market's going my way. Everything's ducky. It's only when it's going down, going the wrong way, as defined by your position, that we now need an emotional partner. And how do we do that? You can't say the cattle market's wrong because you're in the cattle market. You're in the cattle business. So how do you do it? You blame it on the speculator. They're taking the market down. They don't do anything, folks. The market's going to go where it's going to go, whether you like it or I like it or not. One of the things that you have to have been told since you've been in Chicago, and if you haven't been told here in Chicago, you probably already knew it, is as far as commodity speculation is concerned, somewhere, depending upon who you ask, 80, 90, 95% of the people that speculate in commodities lose money. That happens to be probably about right. Why do 80, 90% of the people that speculate in commodities lose? Because I got a flash for you, folks. It's not that hard to make money. It truly is not that hard. It's terribly difficult to keep it. It's not hard to make. Why does everybody end up net losers? 3 reasons. This is going to sound real easy. I'm going to tell you, this is the Holy Grail. This is the answer to the game. And this is the only answer to the game. A lot of people that speculate in commodities believe when they lose that the answer to the game is they didn't understand enough about the market they were in. Wrong. Absolutely dead wrong. You don't need to know a thing about the market you're trading in any case to make or lose money. And I will even make the case to you people after 14 years in this little game that the more you think you know, the more likely you are to join the 80% club. And the reason for that is this. The 3 reasons people lose: ego, fear, and greed. And gentlemen, of these 3 sins, this is the one that will make you lose your bippy. Ego is the one that will cost you the money. And the reason ego will cost you the money is the they syndrome again. It's the I don't want to be wrong game again. What is the last instant of objectivity before you make a trade? Let's use cattle. I don't care what commodity, tiddlywinks, makes no difference. If you're going to buy cattle, what's the last instant that you're objective about the potential price change of cattle? It's the instant before you buy it. If you don't own any cattle, and you say to yourself, I think cattle are going to go higher, but you don't own any yet, are you still objective about the price of cattle? Yes. You have no built-in bias. You have no opinion on the line. You have no money on the line. You're still objective. What's going to happen to your objectivity the minute you buy that first cow? Do you now have an objective opinion about cattle? No. You now know they're going higher. How do I know you know? Because you just bought one. You wouldn't have bought it if you still said, I don't know, but I think. When you buy it, you've crossed over into, I know they're going higher. What happens to you when they then go down? It's, oh my God, I can't be wrong. And how does this work? Let's use April, huh? June. They're down today, so we can use June. June cattle futures, that is to say. $60 today, approximately. You're in the cattle business. Your granddaddy cleared the land and killed the Indians to get the farm. Your family's been in the cattle business since Christ was a corporal. You forgot more about cattle than the people in Chicago would know. Do you know the cattle business? Yes. Can you prove you know the cattle business? Yes, you got 80 head out there in the back 40. And I've been raising cattle for 20 years. I know the cattle business. And I know that with the price of corn today, with the price of interest rates, with the price of machinery, with the increased population, with the demographic switch, the dappity-boppity-boop, there is no way anybody can make money on cattle at $60 a hundredweight come next June. And how do I know that? Because I can't make money at $60 a hundredweight come next June. And you're not going to believe this, Ralph. I just was up there in Chicago, and I have no idea how these people stay in business, but you actually can buy a thing called a futures contract and lock in a price of $60 a hundredweight on choice cattle for next June. And we know they got to go to at least $70. They got to. Do you know that? Yeah, you know that. So what do you do when you get home? You call your broker over at Merrill Lynch and you say, do you trade any of these cattle future things I just found out about up in Chicago? He says, yeah, firm handles them. I don't handle them myself, Mr. Smith. I just trade the stock market. In fact, I have a little trouble spelling IBM. But yeah, we can handle the order. He says, well, fine. I don't know how this all works, but you buy me one of those April cattle futures contracts. He says, fine. And he buys it. And you call back the next day and you say, where are my cattle? And you got to keep up with me on this. Watch the word changes here. He says, where are my cattle? The broker says, well, they're down to 59. And the guy says, you're kidding. We bought them yesterday at 60 and they're down to 59? I can't believe it. Buy me another one. Has he asked anybody's opinion? Does he need anybody's opinion? He knows, right? Does he know? He really knows. Buy me another one. Calls back the next day, says, where's my cattle? They're down to 58. 58? I don't know how in the hell that company stays in business up here. This is incredible. Who in the world is selling these things at $58? It's crazy. Buy me two. What mode is this gentleman operating in, folks? No, he hasn't moved into greed yet. I'll show you how that works. Right now, he's operating right here. I can't believe I have missed a game that's this easy for this long. Let me in. Double down at 58. I'll buy two more. Fourth day, calls back. He says, where is the cattle? Notice there's been a small, ever so slight shift here. Instead of where are my cattle, it's where is the cattle. And folks, if you don't believe me, you ought to hear the recordings of the conversations. That's exactly what's happened. Because why does he switch from my to thee? He is beginning to create in his mind the groundwork of the coming shift from it was his idea to somebody else's idea. That's what he's going to do. And the first step is to stop calling them my cattle and start calling them the cattle. Where's the cattle? Well, they're down to 56. They're where? They're down to 56, and that's limit down, and I don't even know what that means, Ralph, but it looks kind of bad. They're down to 56. Gee whiz, what in the hell? 56 a hundredweight? June cattle we're talking about. I mean, not something else. I mean, are we sure we're talking about what we think? Yeah, June cattle. Where's our friend right now? He's out 4 cents on the first one, folks. That's $1,600. He's out 3 on the next one. That's $1,200. He's out 2 on the last 2. That's 4 more. 1,600. 32 and 12, $4,400. Now let's act like this is not a big, wealthy rancher. This is just kind of your going along middle-sized Alabama cattle feeder. And I'm going to guesstimate, because the number's almost always the same, somewhere between $5,000 and $10,000. Somewhere between 5 and 10 grand. Most people on their maiden voyage will move at $4,400, $5,000, $10,000 from here to here. We've had about 5Gs is just about all the ego most people want to pay for the first time out. Now the big hitter waits for 10. The result's the same. The conversation is there where? 56. My God, how can this be? I don't understand. I'm losing how much money? $4,400. What's the next thing that customer's going to say to that broker? What's the next step to getting out of the trouble? Oh, no, he's not ready for that yet at all. That comes a little later. Thank you, sir. The duck came down, gives that man $100, because the next thing the guy says is now that he's had all of this action that he can afford, and he doesn't want any of that anymore, he now needs a partner. So he says to the broker, who told him, by the way, 4 days ago, he couldn't even spell IBM, much less cattle futures. He says to that broker, well, what do you think about this market? Now, why does he say that? Number one, he wants help. He wants an emotional crutch. Number two, he wants anybody in the world, from his 9-year-old daughter to a vision from God, to tell him that he's still all right being long this garbage. Because he can feel the water coming up to here. He's starting to drown. He needs a straw. So he says to the broker, what do you think? And guess what the broker's going to say? The broker knows a few things. How do brokers get paid? You get paid on commission. How do you generate commission? By generating trades. If you are a new customer of that broker, what is the one thing, right or wrong, that that broker assumes about you as a customer? And it is that if you lose and you get out and realize that loss, that the odds on you walking back in the next day and saying that was a lot of laughs, let's do it again, are kind of slim. He knows that. So for his own self-interest, he doesn't want you to take that loss either. He also further knows that you don't want to take that loss. You are not yet ready to admit that you have just become the dumbest cattle trader in Alabama in the last 4 days. And he knows that. So what does he say? He's going to throw you the straw. He's going to say, well, Ralph, I just kind of thought you might be going to ask me that question this morning because I could see what was going on here. So I called our people up there in Chicago that are in that cattle market to find out what's going on. And what did he just do? He just turned that straw into a real wide log. Because he just told you, I've called an expert. Remember Ron said there's nobody up there where the bad says they? There's also nobody up there where the bad says expert. But you people out there that are looking for straws, we'll tell you all you want that we know what we're doing. And by the way, I want you to think on that for a second. If a broker knew what the market was going to do, why in the hell does he need you as a partner for $40 a contract? Think on that for a while. I mean, if I know what the market's going to do, folks, the last thing I need is customers. The last thing. Brokers don't know. Believe it, they don't know. That doesn't mean you can't have a professional broker. But don't count on him to tell you what the market's going to do. He doesn't know any more than you do. And he's got a built-in bias that's the wrong way. Anyway, I called our people up there in Chicago, and they've told me that over the last 18 years, the June cattle futures contract has never fallen by more than 10% in the months of November and December. They also tell me that it appears technically that we're creating an island reversal bottom in this cattle market. We've got a long-term trend line that looks like it ought to bottom out between 55 and 56 cents. And with any luck at all, since the oscillators are oversold right now, we ought to get at least a 2-cent bounce in June cattle futures, even if they're still going down. What'd he say? He said, if you're crazy enough to buy this garbage, you can stay in it. That's what he said. And I can give you all the technical gobbledygook you want. I can make it up. I can even be telling you the truth. What difference does it make? None. None. Where is this poor turkey? He's losing. He is now in the hands of the pit god. Like this. And when the pit god gets a hold of you like this, you don't get away. I don't know how much he's going to lose, but he's going to lose. He has no plan, no discipline. He's gone from I know to I think to oh my God. He is now, together with his broker, praying to the pit god to let him out of the trap. He's not interested in cheese anymore. He just wants out of the trap. He ain't going to get out of that trap. I can tell you almost to the dollar how much this guy's going to lose on this trade. He's going to lose $1,000 more than he would have told you he could afford to lose when he started. How do I know that for absolute certain? Because he's not going to get out until he can't stand the pain. He's not going to get out of this position as a market judgment. He's not trading cattle anymore. He's trading his checkbook. And at $1,000 more than he can afford, he's going to put in, and I know you had a little thing on orders today, or yesterday, you know, market orders, stop orders and all that. Well, one of the kind of orders they didn't tell you about is the order this guy's going to enter when it's $1,000 more than he can afford to lose. It's called a GMO. Just get me out! Did that sound like an objective market decision? No. Totally out of control, totally at the mercy of the marketplace in his checkbook, and he throws away $8,000. He was long cattle on his ranch, right? Because he's in the cattle business. And he buys cattle futures because, quote, he thinks they're cheap. And then he gets out with a $9,000 loss. What's the first thing he's going to say? That hedging doesn't work, and I knew it didn't work. Hedging, he says. Hedging. I see. You're not going to find that scenario in the definition of hedging in any book that I've ever read. But why is he going to say that? Because he's got two choices. He can either say, hello, dummy, or blame it on something. He can't blame it on this poor broker because he didn't ask him anything. So he's got to blame it on something. So he's going to blame it on the Chicago Mercantile Exchange for talking him into hedging, which he didn't do. And just for the argument here, folks, you see, once you get into fear, you're dead. I mean, that's the bottom line to that. Once you move into this frame, you're out of business. You're going to lose. I mean, it's preordained. Write it down, take it to the bank, you're going to lose. What happens here? How does this one work? Real quick, we'll make this a little shorter because the result turns out to be the same. All that happens in this guy is that he gets to go through an extra step, and it'll cost him more money than if he hadn't. He buys at 60. He buys at 59. He doubles up at 58. And now they start going up. Where did he say they were going when he bought them at 60? They were going to 70, right? Remember when I said he thinks they're going to 70. They got to go to 70. They're going to 70. When they get to 66, has he got any money made? He's got some nice money made. He's got about 8 to 10 G's profit. How long do you think it's going to take his broker to explain to him that he can buy more without sending any more money and use the profit as the margin to buy the next ones? Oh, about 30 seconds. If he's a slow broker. New York second if he's quick. What's our friend going to do? He's going to say, you're kidding. Mother, where has this been all my life? My God, is this neat? You mean I can buy 6 more of those things and I don't have to send you any money? And they keep going up and I can do it again? You mean that's... God, I don't know how you people stay in business. Do it! So we buy 6 more at 66. What are we doing? We're operating with these two together, and if you're looking for a recipe for a disaster, folks, that's it. We got both working. I'm right, and I'm getting rich. How much is this guy going to lose? He's going to lose $5,000 more than he could have afforded to lose when he started. And the way he's going to do it is when they get to 69, and he's up $18,000. I'm not going to bother with the math because it all works out the same. He's up a big piece of change for how he started. They're now only 100 points from where he started buying them. And he's got 4 and 6, and he bought 2 more at 68 on the way to 69. He's got 12 contracts. Does he put an order in to get out at 70 and take that $19,000 profit? Does he? Absolutely not. It is the furthest thing from his mind. What do you think you're going to be reading about cattle and cattle prices and the prospects on cattle prices and the movement of meat out of the store and any other bloody fundamental story you want? What is it going to be saying to you when cattle gets to 69 from 58 in 3 weeks? Is anybody going to be talking about how cattle prices are going to go down? No. That's how they go up. See, they go 58 to 69 because we got an outbreak of African swine fever in There's stories all over the place why they're going up. What are people talking about? Well, they're going to 75, 80 for sure. I mean, 75 is now in the bag. I mean, when I said they were going to 70, I did not realize we were going to have this FDA thing on pork. I mean, I didn't know that was going to come out. And I really didn't know there was going to be an African swine fever outbreak in Arkansas. And that's worth at least another nickel on the cattle. And the corn crop, and there was a storm. And, my God, 75 for sure. They stop at 69 for a day. Then they tick up to 70. Is he out? No. Could he have been out? Yeah. Doesn't get out. 70. Now we go back down. Back to 69. 2 days later, 67.50. What's he say? Has he got a profit? Still got a big profit. What's he say at 67.50? Ah, yeah. Maybe I should have gone ahead and stayed with the original deal. What the hell? When they get back to 70 cents, I'll let them out. He's going to let them out. Those poor people that sold this stuff to him, he's going to give them a break and let them out at $70 when they get back to $70. Do you know how to spell slim chance? They're not going back to $70, folks. He's history. He's not going to see $70 again. And I promise you, I do not know for a second how the pit God knows that his number was 70 and went through it and now will never go back. I don't know how he knows, but he knows. And that guy's going to lose because he started out with an opinion, backed it up with being right, looked at the money, got greedy, lost the plan. He's now going to lose money. He has no plan. You cannot speculate in anything, people, without a plan. Plan the trade, trade the plan. How many bankers walk in to the Fed open market window and buy a bunch of money through Fed funds just because? They do it because of economic reasons. They do it because they've made some management decision or they've been forced to make some management decision. They got to buy some money. How many people go out and buy feeder cattle just because it seemed like the thing to do because it was 2 o'clock on Tuesday? Well, I'll tell you, not somebody stays in the business very long. Why in the hell do people believe that somehow you can speculate in commodity futures or in the stock market differently than other things? This is harder. You know why it's harder? Because of the leverage. How much money do you have to put up as a speculator to control 40,000 pounds of cattle at 60 cents a pound? That's $24,000 worth of cattle. How much money do you think you got to put down to do that? $1,200. 5%. What does that mean? That means if this thing changes by 3 cents, his money either doubles or goes to zip. How fast can we do 3 cents? 2 days. Now, what other deals do you make where you put up $24,000 and run the risk of losing it all in 3 days? Would you make that trade? No. Why? Because that doesn't seem like a good idea. Then why would you do it here? Don't do it. Have a plan. The only way to speculate successfully is to get rid of the ego from the point of view of, and I don't know if you can tell, but I never did get rid of the ego. I got all I can haul worth of ego. That's just kind of built into my genes. I don't know if it was the old man or the old lady, but I got it. But I also know that every time it rears its ugly head with what I'm doing in the market, I lose. You are at the mercy of the system unless you plan your trade. It all comes back around to the same deal. Please plan your trades. Thank you all very much. Have a nice trip home. Oh, wait a minute. Hold it a minute. I got one little thing I got to show you. Greeting card. It's the epitome of a commodity futures trader. Front of the card. There's a very well-dressed turkey sitting in a very large desk chair. He's got his feet up on the desk in front of him. Across the desk is a much smaller chair and a chicken. The chicken's very nervous, sweat popping out of his head, very excited. And the chicken says to the turkey, "The sky is falling." The turkey says, "Sell sky."